Join me as I dive into the world of day trading to see if I can make money fast using some secret strategies. Fast decisions, fast rewards, but also fast risks. The best part? It's for everyone, no matter your age. Whether you're in school or retired, you can dive in. Today, I'll show you how to turn that risk into real profit. To make money fast, day trading is one of the quickest ways to earn big. Buy and sell within the same day, sometimes even in minutes. But here's the catch. It's high risk. Big rewards can come with big losses. Stick around because I'm going to show you how to make it work and turn those risks into rewards. First, we discuss problems and challenges. A lot of people think day trading is all about quick wins and instant profits. But here's the truth. It's not that simple. New traders often get caught up in the hype, thinking they can make money fast without fully understanding the market. The reality? Most beginners fail because they don't know how to manage risk or control emotions. The market doesn't care how much you want to win. It's unpredictable, and without a solid strategy, you're setting yourself up for failure. First, risk management is a must. Never risk more than 1 to 2% of your total account on any single trade. This means if you have $1,000, don't risk more than $10 to $20 per trade. Why? Because losing trades are part of the game, and you don't want to blow your entire account in one go. Set stop losses for every trade. This automatically closes your position if the price moves against you by a certain amount, protecting you from bigger losses. Next, let's talk about market analysis. This is how you predict price movements and find the best entry and exit points. There are two main types of analysis: technical analysis and fundamental analysis. Day traders, technical analysis is your best friend. This means reading price charts and identifying patterns that indicate where the market might go. Patterns like the doji, hammer, or engulfing candles can show you potential reversals. Now, let's talk about indicators. These are tools built into your trading platform that help you make better decisions. RSI, Relative Strength Index, tells you if the market is overbought or oversold. MACD, Moving Average Convergence Divergence, helps you spot momentum and trend changes. Moving averages show the average price over a set period, helping you spot trends. Using these together, you can spot entry points when the market is about to move in your favor and exit points before the market goes against you. Finally, remember, patience and discipline are key. The market is constantly moving, but not every moment is a good moment to trade. Wait for the right opportunities, follow your strategy, and don't give in to impulse decisions. A successful trader isn't just fast, they're smart. So, in summary, use risk management to protect your capital, rely on technical analysis and indicators to guide your trades, and above all, stay patient and disciplined. Stick to a plan, and you'll be in a much better position to make day trading work for you. Now, here's the secret that most traders don't talk about: the power of the 1-minute pullback strategy. When the market is in a strong trend, whether it's up or down, there will always be small pullbacks. This is your chance to enter the trade at a better price. Here's how it works. Let's say the price has been moving up steadily. Instead of chasing the price as it goes higher, wait for a brief dip, then enter when the price starts moving back up. You're buying low within a trend, and that can significantly increase your profit potential. Why does this work? Because you're riding the momentum of the trend, but at a more advantageous price. And here's the key: these pullbacks happen all the time. It's not about predicting the exact moment, it's about waiting for the right conditions and jumping in at the right time. So, to wrap things up, day trading can be a powerful way to make money, but it's not a shortcut. To succeed, you need to focus on a solid strategy and manage your risks wisely. Remember, always use a stop loss and don't risk more than 1 to 2% of your account per trade.